Good morning, traders, and welcome to the Pirate Traders live stream. My name is Charles. I am an ES futures trader who uses Market Profile and Bookmap to get an insight as to what the market is doing for the purpose of making money as a day trader. Here in the brigade, we share these ideas so that we can all prosper together. All right. Well, what we've been talking about the last few days in the ES is the slow melt to the upside. Every day we've been predicting that the market was going to make a higher high. We talked about it 2 days ago. We talked about getting in at the lows near the previous day's range, targeting a move back to the previous day's high was a good trade. We talked about it yesterday. We said getting long near the lows of the overnight, targeting a move to the previous day's high is a good trade. I'm not saying that today. Quite the opposite. Because this morning we are opening with a gap down. A gap down is the market's way of telling us the momentum up, at least for the moment, is over. Okay? The market has pushed as far as it can push. It has run out of buyers willing to get long at the highs. And so now the market needs to spend some time balancing. If you're wondering why this sell-off happened in the overnight, it is because of PCE and GDP numbers and the market's reaction to that. But that doesn't really matter. It doesn't matter to us why it did what it did. What matters is making a lower low today, which we will when the market opens in 1 minute, means that the momentum is likely over to the upside. Okay. And again, that's just for the time being, for the moment. So how do we carry that information forward as day traders? Well, we know there's two ways to think about balance. The first question we want to ask ourselves is, where did the momentum start? And that was on this day down here. So the momentum was from here to here. And there's two ways to balance off that momentum. Okay. We can either go sideways with price at a higher level for however long it takes for the market to break higher. That is called balance with time. Or we can get a pullback with price where the market dips back down, for example, to fill this gap that we left behind on the 22nd, right? To come back and fill that gap. That would be balance with price. So today, when I see that the market has made a lower low on the daily, I'm no longer targeting a move to the previous day's high. That's actually a great place to put stops for a short, not great places to put take profits for a long. Because what is the market likely doing now? It is either going to go sideways up here, in which case there's no guarantees whatsoever we get to yesterday's high. Not that it's impossible, but just there's no probability of it. Okay. And there's even a chance we may get a pullback with price. If we're going to have this massive sell-off, it may start today. So by understanding the change in the auction process and what the gap down today tells me how to carry this information forward. So now as the opening bell rings, I'm asking myself, is this a gap fill? Will the market get back up to yesterday's low? Or is this a gap and go where the market immediately starts to press lower? This is a gap and go so far right now. So the next question is, can they get to the overnight low? They got there. Okay. So the next question is, can they turn this into support? If they can turn the overnight low into support, we look for another move lower down towards 54.80. If that gets repaired, that might be all the market needs. We may dip below 54.80 and then reverse right back up out of here. Okay. If we get new selling there, we're bearish to get down to 54.64 and we monitor for continuation lower. If we are going to be in balance, if the market is going to start going sideways, I have a feeling that this area around 54.80 will be the lows. Okay. I have a feeling that the range for the balance will be something like this right here. Okay. Obviously it's way too early to call. We would have to dip below there and then reverse back up to be certain that that's the balance area low. But to me, if the market is going to balance with time and not price, 54.80 is probably about as far down as it goes today. If we get new selling below 80, that's where it gets bearish. And we start thinking we're going to get that larger pullback with price. Okay. So right now we're watching the overnight low for resistance and continuation to the downside. It's just one of those days when the market opens up and immediately moves and makes you move quick. It don't give you no time to think about, do I want to be in a trade now? Okay. Okay, so the ticks tell me we're not ready to go lower. Doesn't mean we can't get resistance and go lower from here, but I think the odds are the market's going to try to fill the gap first, try to get back up to 55.28 because the market opened so oversold, as we can see from the ticks here. It needs to cool off. All right, we need to force some of these sellers to take profits, and we need to give new sellers a chance to get in. There's two ways the market can do that. It can just stay right here and kind of grind in here until this slowly works its way higher, which would take probably, 30 minutes. Or we can start to retrace price a little bit, and then the ticks can pop back up with price. So my guess is they're going to try to poke back up and fill the gap here. What are we watching for? Sellers. We're watching for resistance. Okay, so we're pushing into the first potential resistance level right here around 55.05. Does the market get smacked down, or does it continue back up through the opening price? Passing through the opening price now would significantly increase the odds of a gap fill. And the next resistance I see is around the opening price. So if the sellers want to gap and go, they want to smack it down right now. If not, we're likely to pass through that open. And so you say to me, Charles, this is my first time here because everyone pushed the like button and YouTube suggested that I come check this video out. And I want to learn more because this is really interesting what you're talking about. Knowing the last few days that you should have been getting long targeting the highs from the previous day because we had a slow melt up, knowing that today that's over and you don't want to be targeting yesterday's high anymore. How do I learn to think like that with my trading? The answer is you take my workshop, my friends. I teach a workshop called the Mastery of Markets and Minds workshop. It's 2 weeks long. It's happening in 2 weeks, it's happening in a week and a half. And I don't do them often, so it's just a coincidence that there's one coming up. I teach everything that you need to know about trading. I teach you how to read charts, how to read the auction process, how to understand what's happening in real time. I teach you how to hone your intuition, how to grow your skills as a trader, to become a better and better trader by exercising your skills and developing them over time. I teach you how to differentiate between self-understanding and market understanding. Why are you having problems? Why aren't you profitable? Right? Maybe you're right most of the time in what you predict the market is going to do, but you still don't make money. There's a problem somewhere in the process. And that problem is either with your self-understanding, it's something to do with your human psychology, or it's something with the way you're reading the charts. I hope you figure out which is the problem and how to solve it once you figure that out. I teach you how to think in probabilities and manage risk. This is really what separates professional traders from everyone else. Anyone can learn to read a chart. Anyone can learn to think about human psychology and try to make, changes to their trading strategy based on that. If you can't learn to manage risk, you will blow up your account. You will not last. So learning to manage risk and prioritizing risk management is really the key to full-time trading, to professional trading. And I teach you how to do that. So if you're interested in joining, head to marketsandmind.com. There's a link in the description for the video, and you can just click on this. Today is the last day for the early bird special pricing. It gets $75 more expensive if you wait till tomorrow to sign up. You can also always change your mind up until 2 days before the course starts. It will give you a full money back, refund. So if you decide to sign up now, today, and get yourself the discount, and then you change your mind next week, it's totally fine. Okay. The course is taught in a webinar. So you would get links to join a webinar via Zoom. So you can watch it on any, device you'd like, anytime. You got 2 weeks of 4-hour sessions. So each day from 11 a.m. to 3 p.m. Eastern. And if you can't watch those sessions live, you don't have to be there live. All the sessions are recorded and you can watch them for up to a year afterward. Okay. So if you're on the bench, if you're on the sidelines, if you're trying to go from hobbyist trader to professional trader, making this investment in your education could be the big change in your life that you've been looking for. So I hope to see you all there. marketsandmind.com. All right, so back to the live market. We are getting resistance at the halfback, which got us back below the previous day's low. This is officially bearish to see, and it remains bearish as long as we remain below 55.02. Okay. This is bearish because this is a gap and go. I want everyone to remember what I said a minute ago. These ticks are way oversold. When the ticks are oversold like this, you do not have to chase shorts. You do not have to try to short the lows because it will keep coming back up into resistance, into resistance, into resistance, into resistance until the ticks have had a chance to cool off. So no reason to force shorts here at the low. Wait for the market to come back up into resistance. Wait to see that resistance, then get short. Okay? Also, I will note with the tempo right now, this is feeling like one of those markets where a big chunk of the move is likely to happen in the first hour of the day. When the market wakes up and has this emotional of a reaction to, something like CPE, it's likely to wear itself out pretty quick. So this also increases the odds of balance with time in my mind. So we are laser focused on 54.80 here. If the market is going to reverse, well, there you go. We just repaired it. If the market is going to reverse and we're going to balance with time, meaning that we're going to come back up into yesterday's range, this is where that reversal should happen right now. So if we get new selling here, we are balancing with price, not time, and it becomes very, very bearish. This is also a good moment to head back to the daily chart and take a look at a trend line we've been monitoring there. Yeah, we're back below it now. That is less than bullish to see on a longer time frame. The bulls really need to bounce up out of here or things are going to start to get very bearish very soon. Okay, well, no bounce whatsoever, so that means the next move is to 54.64, and we will look for the same exact thing there, for the market to dip below it and then turn around and come back up. So it's not a support level like the market would bounce right on 64, but repairing the weakness might be all the market needs to reverse. So we will look for taper just below that level. We did not get any at the last week reference. So that is bearish to see. But we'll see if this one reverses the market. I know I sound like a broken clock here. I just keep repeating the same thing over and over again. But the market moving this far, this fast, is not natural and it's not normal. Okay? It's all fear and panic right now. That will come to an end. Things will cool off. And I have a feeling this thing will completely retrace. It's just we're still in the fear right now. We're still in the people are waking up. They're opening their computer screen. They're seeing that what's happening with the charts and they're reacting, right? But that's not going to last all day. And if it happens if we have this big of a reaction in the first hour, that might be all the market does. So I do think we're fishing for a low, even if we haven't found it yet. Good morning to Jay. Welcome, welcome. Percy in the house. Sheena is here. Tim in the house. Welcome to Mark, Rich, Tommy, Will, 365, Sport Flow. Every day, all day. Sport Flow. Flowing it up. Sook is here. Billy K in the house. Nap is with us. Arjit, good morning to you. 365 says, what is the red arrow on the opening price? That is showing you the gap. So the red arrow represents the gap. We measure gaps as between the highs and lows of previous sessions. So the gap is not to yesterday's closing price all the way at the upper end of the range. It is just to yesterday's low at 55.28. And obviously right now I'm still bearish. I think the next move is to the downside, but I bet you we come back later on in the day for that gap. Because we are going too far, too fast on the gap and go. And I know what that means. It means people are getting short at the lows, fixing to get squeezed. They just can't wait for the market to bounce and then sell resistance. That is what we call FOMO selling, chasing price. And they can't chase price forever. DNK says, I hope for no pullback. I'm short from 55.14. Well, brother, you're feeling like the king of the universe right now. That's basically the high. Crushing life, DNK. Good morning to Kevin, Willie T. Willie T says, on the workshop, I've purchased many educational workshops. This one is by far the best investment. Appreciate you, brother. John Q in the house. Good morning to you. Arjit says 5480 was failed auction sell earlier, right? 5480. I'm not sure. If you're talking about a weak reference that was there, yes, it's an unfinished auction. So the simplest way to think about it is when you have one of these weak references, like the one we currently have at 5464, the market knows for a fact that if it comes back down there, people will do business. So that doesn't guarantee that the market will come back to that level, but it increases the odds because that's what the market is always looking for, is a place to do business, right? So for example, they ran out of sellers just now, so they're pushing back up to look for sellers at a higher price. Sellers are no longer willing to do business down here, but they will do business here or here or here. So the market comes back up to look for those sellers. Once it finds them, guess where it's going to go to look for buyers? Boop, boop, back down through that weak reference. Jeremy in the house. Good morning to you. Danny G. Welcome, welcome. Jay says we got some numbers at 10. Truman and Jay. We'll look out for those. Let's jump over and take a quick look at the NQ. See what's happening there. Just give me 1 second here. Let me get this loaded. Yeah, same exact thing as the ES. They've been so in sync lately. So it's the same story, okay? There is a potential that this is going to turn into a balance area to balance with time. And the market is going to go sideways in this range for a few days, okay? We are right at that pivotal point right now. New selling from here is bearish to continue the momentum lower. New selling below 19,068. So this is your next major support, this large node on the cumulative around 19,068. That's the last chance for the buyers to bounce if they want to balance with time. If you start to get new selling below there, you're looking for that much bigger pullback to the downside. So both markets are looking super bearish, but they're also both looking like they went too far too fast and they need to cool off for a second here. So I would be looking for resistance on the Q around 19,200 and 19,220. Then 19,240. Man, more new selling at the lows. Bear. Bear. Bearish to see. Bearish to see. Okay, so the same thing I said when we repaired the last week reference. It might be that all the market needs to do is just repair this level at 54.64. Maybe just poking through that'll be enough. And then we turn around and head back up. So I see the last potential level of support, if that's going to happen, as being 54.57. New selling below 54.57 means the move continues to 54.44. I just want to remind everybody we are still in the first 30 minutes of the day. I just want to really emphasize that, because this market, when it makes big moves in the first hour, that tends to be the move. And by the C period, the market cools off. So it's bearish for now, but we are monitoring the momentum. Good morning to Holding a Fart and Zach. Welcome, welcome. Uh, 365 says, which book is preferred to read about mindset? Well, if you're talking about mindset, there's a lot of great books on mindset. If you're talking about specifically for being a trader, I would say two books that are a little bit contradictory to one another, but that's why you want to read them both. One is Trading in the Zone by Mark Douglas. This is one of the best books on recognizing how your psychology and your mindset affect your results in your trading. And then there is, oh man, what is that book called? The Mental Game of Trading, I think is what it's called. Yeah, Mental Game of Trading by Jared Tendler. This is also a really, really great book. And essentially the difference between the two is that what he teaches in the Mental Game of Trading is not to try to avoid your emotions, which is essentially what Mark Douglas is teaching. Mark Douglas is trying to teach you to not have emotions, to trade much more like a robot and think purely in probabilities and purely in numbers and not have emotional reactions. And that if you can stop yourself from having emotional reactions, you'll stop making bad trades, you know? But what Jared teaches in the game is that actually you want to have emotions and you want to pay very close attention to those emotions. As a matter of fact, you want to become as obsessed at studying your own emotions and the things they make you do, the reactions that you have to the feelings that you experience. You want to pay as much attention to that as you do the market generated signals. You want to pay as much attention to, you know, the market suddenly changed and I forced my way into a short because I wasn't expecting it and I felt like I had to chase or whatever. That is just as important as a gap down, you know, or any other piece of information. And if you can learn to use your own psychology as signals for what's going on in the same way you use market information as signals, you can know when to do business and when not to. When should you be entering trades and when should you be walking away? So yeah, I would say read both the books. They're both very, very valuable. I cover all of this in the Mastery of Markets and Minds workshop in much more depth, and I have visuals to explain everything. But yeah, if you're looking for a book, those are the ones I recommend. as far as a general mindset book, buy any book by any successful person. They could be a CEO, they could be an athlete, they could be a musician, they could be a movie star. It doesn't matter. Pick anyone who's at the very top of their game, read their book on mindset, and you'll get everything you need. And they're all exactly the same. And that general mindset is just, you have to be analytical. You have to learn from your mistakes. You have to push yourself to grow, to do hard things, but you also have to believe in yourself consistently. And you have to be willing to do whatever it takes to succeed because you believe you can. Okay, here comes the B. We have some data dropping here. Whenever we see the Bookmap go dark like this, all the liquidity disappear, we know it's best to wait for that liquidity to come back before we change our minds about what we think the market is doing. Okay? A lot of times when the news comes out, you get a lot of volatility, a lot of really fast, but the market can just turn around and keep going the way it's going, or it can completely reverse from there. You got to wait till the liquidity returns before you can trust which of those two is happening. Okay, looking for some resistance here around 75. Does the market get smacked back down? If not, we'll head up to test the halfback. Man, this market is super emotional this morning. Oh, PCE higher than expected. Oh no. Okay, so the ticks with that PCE drop were finally able to get their way back to the zero line. So now we can have better clarity as to what's happening moving forward. Are there really more intraday traders today going short, expecting the market to go lower? Or are we going to run out of steam and start to turn around and come back up? As long as these ticks stay below the zero, the higher probability is continuation lower. If they're able to get above the zero, then that would be the sign that we've run out of steam to the downside. So for now, the momentum continues. The low is poor and in need of repair. Design Knob says, going to be walking bow-legged for a while. Got liquidated at 19,107. Take a guess where that is. 19,107. Oh, no. Oh, no, brother. Well, don't worry. It's coming back there. It's a poor low. It'll revisit. But yes, if you were long and you got squeezed right at the low of the day, that is about as painful as it gets. It happens to everyone, man. It happens to me sometimes. Don't worry about it. Keep your head in the game and make back the money in the next trade. Jamie says, Pirate, I got your channel suggestion from YouTube today. So happy to see you back. I remember watching you trading almost every day about 3 years ago. Oh, well, we're glad to have you back, Jamie. Yeah, I just do the occasional public stream. So if you hit the notification bell, the subscribe and notification bell, it'll tell you in the future. I do about one a month. The rest are all behind the paywall. Sheena says the UPS is laying off many workers and closing some facilities due to tariff uncertainty and relationship with Amazon. It's interesting. CMZ says Jared Tendler is different in that he gives the detailed process to address emotional issues. It mirrors the way in which you would create a process for trading. 100%. Yeah. And he has so there's 5 main categories that you got to figure out what your emotion-based problem is. Right. And then he does a whole chapter on each one of these things. So they're very similar to one another. There's greed and fear and tilt and, they're all very similar, but he goes in depth explaining how the subtle differences between them. You can recognize in yourself, is this greed, or is this fear? You can recognize the subtle differences and then how to make adjustments to your strategy using that. So yeah, it's a great book. Again, I go over that in detail in my Mastery of Markets and Minds workshop. Today is the last day for the early bird special. Sign up now or you're going to email me 2 weeks from now and say, can I still get the deal? Because that's what everybody always does and it drives me crazy. They wait until 2 days before the workshop starts and then they email me and they say, hey man, can I still get that deal where it was cheaper? Got to sign up today. Jamie says, do you have a service where you stream? Yeah. So below, if you look in the description, the second link that's in there is to join the Pirate Traders Brigade. So that is my group, my trading room where I hang out every day. So for the first hour of the day, every day, we all hang out together and talk charts, which is what we're doing right now. This is the same thing as the Brigade, just public. $20 a month, every day. More new sellers. Nap says, has anyone actually used Jared's methods? Yes, me. Have used and still use to this day. The problem is most traders don't do homework. That's the biggest problem. Most people, they sit down in front of the chart. They do their best to make decisions about how they should trade. They do their best to manage their emotions while they're trading. And then when the trading day is done, win or lose, they're done. And they walk away and they don't think about it anymore. And that, I'm telling you, is the difference between success and failure. I've worked with enough traders one-on-one to know this is true. If you really want to excel at this, which is, by the way, the same as anything in life, you have to do your homework. You have to sit down at the end of the trading day and analyze why you did the things you did. What were you seeing in the chart that was telling you to take the trades? And what were you feeling in the moment that made you actually take those trades? When you combined those two together with the effort of doing it daily, I guarantee with 1,000% certainty, you will get better and better every day. But most people just don't do it. You know, in that book, Jared describes it as this inchworm concept. The way an inchworm crawls is that it's flat, it's laying flat, it pulls its back end forward, and then it's kind of like, it's got this kind of shape where it's the front of its body is touching the ground, the back of its body is touching the ground, but it's arced up in the air, and then it stretches that front bit out a little bit, and then it becomes flat again. And then it pulls the bottom bit forward, it's arched, and then it stretches out the front. Pulls it forward, arched, stretches out the front, on and on and on. Okay? This is the process of moving from not profitable trader to profitable trader. But it's a slow process. First, you have to take your bad traits that aren't working and you got to improve upon them. Then you got to take your good traits and you got to make them even better. Right? You got to take what's working for you and push it even further. And then you got to figure out what's not working for you and you got to correct it. And you got to take what is working and push it further. And you got to go through this endless process over and over and over again to get from not profitable to profitable. And it is fucking hard to do because you have to do it every day and you have to work really hard to change the things once you observe them. Once you recognize, oh, I jumped into that trade too fast. You have to force yourself to not jump into the trade the next day. You know what I mean? If you notice that you move your stops too quickly, you have to force yourself to leave your fucking stop where it is the next day. You have to constantly follow through and do that work. That's the hard part. But if you do it, it works. Sheena says, on your chart, one of the profiles is expanded and one is contracted. What's the short one in the middle? Oh, what's the short one in the middle? Okay, so what you're looking at on my chart is two profiles. There's this profile right here, and then the one next to it right here. These are the exact same profile. You know, it's today's range, just showed slightly differently. So in terms of the TPOs, the difference is these ones are collapsed together. So we can't see it yet because we're only in the the B period. But throughout the day, you'll see these are all smushed on top of each other, whereas these ones are expanded out like a candlestick, one after another after another. And that just helps me to more clearly see what's happening with time. Okay. The collapsed version lets me see where we're spending the most time. The expanded version lets me see how price is changing over time. Okay. Then you got the volume profiles. So the volume profile on the furthest to the left is the full day's range. So from 9:30 in the morning until 4 p.m., all the volume that trades in there. Okay. So this is our next pivotal level right here. We are at the halfback, which is resistance for continuation lower. And we are also at the zero line on the ticks. So here's where we find out whether the market made its low for the day or not. Do we get resistance? Do these ticks get smacked back down? So the volume profile on the left is for the full day, and the volume profile that you see in the middle is the current 30-minute profile. So it's changing each 30 minutes. And that, again, much like time, just allows me to see where is the volume throughout the session and how is it changing right now in this current 30-minute session. So for example, look at the taper on the current 30-minute low. Much cleaner than the taper in the days range. Because when we came down here in the A period, we were getting more selling, more selling, more selling, more selling, more selling. But then that CPI news or whatever it was came out. And since then, it's been more buying, more buying, more buying. So you got that taper in the volume there. All right, no resistance at the halfback. That is less bearish to see. To me, the overnight low is the very last potential resistance level. If we cross back up into the overnight range, I will no longer be bearish, and I will instead be assuming we're going to chop around here for, the next 30, 40 minutes, and then be looking for a move higher later on in the day. So if the sellers want to remain in control, if they want to keep me bearish for this poor low, they do not want to cross back up into the overnight range. They want that to act as resistance. As of now, the higher probability is still the poor low. Nicholas says, do you like the show? Smash the like button. Yeah, what's with only 39 likes, you guys? We got 107 people hanging out. I know some of you are enjoying yourself. Don't make me sing. I'll do it. Zero to Infinity says, Charles, do you risk the same money amount per trade, or do you vary the amount based on what you were seeing and why? For the most part, I risk the same amount of money in every trade. Sometimes if I just don't trust a trade, I'll go lighter on the size. But generally speaking, I'm risking about 2% of my account size in every trade. And what I'm doing is I'm adjusting the positioning for the stop. So like, for example, if I was going to short the halfback right now, and I was going to use the overnight high as my stop, I would be risking about 15 points. Okay. So I might have a position size of, say, 1 ES contract if I was going to take that trade. But now let's say instead I wanted to short the overnight low using the opening price, where suddenly now my stop is, 20 points away. Okay. Well, that's a bigger stop. So maybe now I can only trade with 8 MES contracts as opposed to 1 ES contract. So again, I teach all of this in my workshop with the exact mathematics of how it works out. But the idea is every trade I take, whether the stop is 2 points away or 20 points away, I'm always going to lose the same amount of money. And so I can choose to put my stops at the most strategic location, meaning the place they're most likely to not get stopped out and keep me in the trade. And no matter what, I lose the same amount of money. And so as long as I have that rule where I lose the same amount of money in every trade, no matter what, And I add to that I only take trades where the reward is at least double the risk. So if I'm risking 15 points, I need to be able to make at least 30. You know, if I'm risking 30 points, I need to be able to make at least 60 to take the trade. As long as you follow those rules, always 2% of the count, and the reward is always double the risk, you only have to be right about 40% of the time. So I only have to be correct in my trades about 4 out of 10 trades that I take. Meaning I can be wrong 6 out of 10 trades and get stopped out, and I'm still profitable. And that's how you adjust for days where the market has tight ranges. Well, when it's having a tight range, you trade with tighter stops. You're still always risking 2%, but you just have closer stops. And then when you have more volatile ranges, larger ranges, you trade with wider stops. You're still risking 2%, but you're just giving the trade more breathing room to handle the volatility. All right, guys, we are getting close to me losing that bearish feeling. Why would I lose the bearish feeling right now? Can anybody from the chat tell me? There's 3 things that I'm focused on that could make me lose that bearish feeling. TNK says, at the low, it started to look like the same grind up we've had the last few days. Yes, sir. We call that a pin. I think it's pinned. We didn't know until now, but I think that's what the conclusion we're going to end up coming to. But can anybody tell me? Tempo. So Nap says tempo. Tempo is a big part of it. What happened with tempo this morning? What happened with the rate of change of the market? It opened and it moved so fast. Just move, 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 move. And what was I saying the whole time it was moving that fast? I was saying this market is getting itself overly short, overly fast. Doesn't mean it can't keep going, but it's going to run out of steam. It's got to cool off. It's got to chill out, right? What has happened since the B period? Slowed down that tempo significantly. We went from rapid, fast drops to a very slow melt back up. Okay? That change in tempo is something changing in the market. The panic, the fear that got us down here is running out, right? And the tempo change shows us that fear is running out. What was the other thing? The ticks. The ticks are the next thing. We got back to the 0 line, and it's still too early to call, but it looks like they're able to hold the buyers. It looks like they're going to keep going up above the 0 line. So they haven't done it yet, but if they do, I'll lose that bearish feeling because it'll be a sign that we have buyers. And those buyers are doing what? Targeting a gap fill. Okay? So the ticks are the second thing. What is the third thing? No one's mentioned it yet. Doesn't look like you guys are going to get it. So it is the weak references. Remember, as the market was trading lower, there were 2 weak references. I don't remember exactly where they were, but there were 2 weak references down here. And the idea was, if we repair the first one and then the market reverses up and out of here, it doesn't need to go any lower. It's gone as low as it needs to go. Well, it didn't. It kept going. So then the question was the second weak reference, right? If maybe that's all the market needs is just to repair that second week reference. Well, since we repaired the second week reference, what has the market done? It's reversed its momentum and it's coming back up. So right now, at this exact second, I am still bearish and I still think we're coming back for the low. But if we were to get back up into the overnight range, if the ticks were to hold the 0 line, I would then be saying that weak reference that we repaired, that was it. That was all the market needed to the downside, which means the downside is over for now. Okay? That increases the odds of a gap fill. So I'm still bearish for just a few more ticks here. But these sellers really need to come in with force right now, or I'm going to be back to neutral. You always want to keep track of weak references. Where are the weak references and what happens after they get repaired? Does something change? Does the market go from dropping like a brick to suddenly slowing down and starting to go sideways, which is what it did at the low, and then turning around and starting to go up again? Well, then something changed after that repair. And this confuses people because it doesn't happen that exact second. It's not like the second you pass through it, it reverses and turns around and goes higher. So they don't comprehend that all the market was doing was hunting for that liquidity, taking out some stops, and then it starts heading the other way. All right, we are back in the overnight range and we have the ticks above the zero line. I am no longer bearish. I am now neutral. Whoops, hold on 1 second. Let me find the banner. There we go. I am now neutral, meaning I need more information to be certain of what comes next. One of two things is going to happen here today from this overnight low where we are right now. We are either going to go back up and fill the gap and get to 55.28, or we are going to turn back around and repair the poor low at 54.56. One of those two things is going to happen. If I can just wait to see how we break away from here, there's plenty of money to be made with very little risk, whichever trade I end up taking. So if it breaks higher, the trade might look like something like this. Okay, risking in here for the reward in here. And if it breaks lower, it might look something like this. Risking here for the reward down here. Both of these trades, the reward is significantly less or significantly more than the amount that we're risking losing in the trade. So if I just wait a little bit for that information, then I get the high probability with the good risk reward. So that's where I'm at right now. I'm neutral, waiting for more information. So then you say to me, Charles, what's the information you're looking for? Well, now we're back inside the overnight range. So I'm looking to see what happens here. Do the sellers come in and smack us back down? Or do the buyers continue to step in? The more buyers we get inside the range, the more likely we get the gap fill back to 55.28. Watching them ticks. Rich says, as one of the reasons why we could flip from bearish to neutral, the lack of resistance to halfback, that was another one. So that's another thing, what we always call a when what should happens doesn't. The market had momentum down this morning. It left behind a poor low. So at that point, what it should have done is pushed into resistance and reversed. We pushed into all three resistance levels and got no reversal at any of them. So that was another sign that we didn't have that bearish momentum anymore. CPI caused it. CPI reversed it. CPE caused it. CPI reversed it. Design knob. Let me reiterate that I was liquidating at 19.107 on the NQ. Design knob, this is your fault. If you had not come into the chat and told us that, the NQ would have continued lower. But as soon as you said it, you doomed the market to reverse for the day. Yeah, it's a bummer, man. It happens. Peter says the low is not a poor low. Do tell. Zach says, was the CPI data positive? No, it was actually negative, but the market was already short. This is what you got to learn about news. It's not whether the news is good or bad that matters. It's how the market is positioned prior to the news. So if the news is bad and the market is already short, there's no one left to go short. So what happens? The market starts going up. As soon as it starts going up, what do all those people that are short do? They go, oh my God, this isn't supposed to happen. And then they panic out of their shorts. They cover very quickly, causing the market to go up very quickly. So the news being good or bad does not make the market go up or down. It's how the market is positioned prior to the news. This is something that took me a while when I used to trade stocks. I used to try to trade earnings calls on stocks, and it would blow my fucking mind that it would be like you would have a stock that would have good earnings. Okay, so with the ticks here, I am now bullish for the gap fill. I know, just like that. Flip and reverse from bearish to bullish. So you would have a company where like they would have really good earnings and the stock price would take off as a result. And so then I'd say to myself, okay, great. The next time this company has earnings, I'm going to look at the numbers, and if they're good, I'm buying the stock. And so then the next earnings comes out, the numbers are good, I buy the stock, and the stock tanks the next day. And I'm like, what's going on? Why is this happening? Well, it's all about what's priced in, not what the news is. So because there was good news the last time and the stock price went up, everybody was long prior to these numbers being released. So the numbers come out, and even though they're good, there's no one left to go long. And so price goes down instead. And this is something that people don't like to admit is the reality of things, that there is complete uncertainty at every moment in the market. Even if you know bad news is coming out, you don't know for sure that stock is going to go down. Because it's not about the news. It's about the positioning prior to the news. Okay, so I'm now bullish, looking for the market to fill the gap to 55.28. I'm not sure it'll go much further than that to the upside. It may not, but it does seem like it wants to fill the gap. And in the same way I knew I was wrong about being bearish when we crossed back up through the overnight low to the upside, it's the same way here. I'm going to give it a little bit of breathing room. I'm going to use this level right here around 54.90. As long as they stay above that, I am still bullish to fill the gap. But if they come back through 54.90 now, they're going to the downside. Remember, we talked about this. From this overnight low, before the market closes, it's either going to go fill the gap today or it's going to go back down for the poor low. I guarantee you one of those two is happening. So right now, it looks like the first. It looks like the gap fill. But if the market gets down here and it's below 90 and it's got new selling, it's the second. It's the poor low that we're going for. So I'm bullish for now. Let's see if we can get that gap fill. Peter says, check again. The low, not a poor low. Peter, I need you to tell me your definition of a poor low. That's a poor low by my definition. So you have to tell me how you define a poor low for it to be wrong. Falcon 1 says, is this a bull trap? I've just clarified. No, I do not believe this is a bull trap. Why do I not believe this is a bull trap? Because of the gap above. Because there's two giant magnets above price right now. There's a magnet right here, which is the fact that the opening price is the high of the day. That makes it weak. Okay. So that slightly increases the odds that the market will come there. And then the second is the gap. We left behind a gap to yesterday's low. That is also a magnet, which increases the odds the market is going to go there. So I can't know for sure the market is going to fill the gap. But I can know, as long as we stay above 54.90, as we just discussed, that is the highest probability. So I couldn't call this, like a bounce that's just a trap for the bulls unless we got back down below here. Okay. Now, there are traders who can do that. They're called innovators. They can recognize the high before the market reverses. That's not how I trade. I trade momentum. So the momentum has to change first for me to recognize it as a change. So right now, the momentum just changed from down to up. I would need to see it change again from up to down to change my mind. If there is going to be a bull trap today, it will be the gap fill. It'll be the fact that we'll get up into yesterday's range. It'll look like it's going to keep going. Everyone will start to get long and chase price up there, and then it comes back down and wipes them out. Remember, the market is like an animal, like a starving animal that's just always looking for liquidity. Today, so far, the way it got the most liquidity was by going down and repairing those weak references. It already did that. It already chewed up all those orders down there. So where are the orders now? Up in here. That is people going long right now for the gap fill, and they're taking profits. That is people shorting at the gap fill, and that is people who are short right now getting stopped out at the opening price. These are the levels where you get new business. So that's what we look for. Where's the market most likely to go? Looking for new business. Truman says, why are there no icebergs or stops showing on your Bookmap? Because I'm on the Trader Map Pro tab. This one doesn't show stops and icebergs, but it shows the liquidity changes. Much cleaner, much easier to read. Whereas the one with the stops and icebergs still has those brackets in it, which make everything more confusing. I just look at whatever I need for information at the moment. Stops don't matter to me right now, stops and icebergs. What matters to me is momentum, reaction to the gap. So I'm more focused on ticks right now. FROD, fraud, says, can you explain liquidity in Bookmap? Are stronger selling colors not liquidity? Okay, so this is where things get tricky. Okay. Nothing in trading, nothing in markets is black and white. Nothing is absolutely this or that. Everything is a shade of gray and a little bit confusing. Okay. So when I say the market is like an animal that's just hungry for liquidity, it just wants contracts to trade hands, and it just goes wherever it can get contracts to trade hands. That includes both the liquidity you can see in the order book, which is what you're seeing with, the Bookmap. So these levels with the different colors, these are orders sitting in the order books. These are shorts sitting up here. Let me switch colors. These are shorts sitting up here. These are longs sitting down here. So they are literal orders sitting in the order books, and they are liquidity. Absolutely. But most of them are going to get spoofed. Most of what you visually see will never actually fill. When the market gets there, it disappears. The market, the animal of the market, knows this. Okay? The other thing is there's tons of liquidity that you can't see, which are stops, because the way a stop order works, your broker is holding the order. So no one can see that except for your broker, but no one else in the world knows that you have a stop order at a particular level. Until the market gets to that level, then your broker puts that into the order book. So the animal that is the market, that is hunting for liquidity, knows that these are fake a lot of the times, and it knows that there are other areas where if you poke into those areas, you take out stops and you squeeze people. This is what I think is happening right now at the overnight low. We're squeezing the longs, okay, below that overnight low. They were just buying up here, putting their stops here. So we've poked down to take out that liquidity, boop, to take out those stops. Doesn't mean the market is going to keep going down. As a matter of fact, if we take them all out, it'll turn around and head up. Because where's the next liquidity? In the stops for the sellers that are going short up here. So the market is always aware of where the most liquidity is, whether that is resting orders in the order book or it is stops. It just knows, and it goes to wherever those are. So we can go look at the stops. Look at that. One single person was stopped out for 144 contracts at that overnight low. So it may not be right now that the market is bearish and is trying to go lower. It may be they just wanted to take out those stops. And now that they have, they turn around and head back up. Now, we couldn't see those orders anywhere in the order book, but the market knew. It knew if it poked down there, it'd get them. And so it did. Design knob, I don't think anybody's going to recognize the "See You Behind Wendy's" references anymore. TNK says, looking at the ticks, I'm not sure we will get a gap fill happening, at least not for now. Yeah, I'm not in denial of the fact that we may have to wait an hour for the market to fill the gap, but that is where it is going. As long as it stays above 90, as I've said, it's going to one of those two levels. It is either going to fill the gap today or it is going to head back for the low. I promise we're not going to just sit at the overnight low for the next 5 hours. We will go somewhere. My guess is the gap fell. 365 says the Trump candle high, resistance, and magnet at the same time can be? And the answer is yes. So it's too early for me to make this as an official prediction right now. But what I think is happening here is that we're pinned. So let me go back to the daily. If you look at this Trump candle, so the reason that we talk about this high is that was the day where everything changed in the market. Okay. So the market had all this crazy momentum to the downside, was super, super bearish. It was the end of the world. It was the end of the world. And then Trump said, pause on tariffs. And we got this whoop, this giant, huge candle. And from that moment on, all the trade we've had since has been very mechanical. It has just been like super, super, super fucking mechanical. Lots of exact references for reversals, lots of strange reversals in places that don't make sense. Just what we would call a pinned market, or a market that is being artificially held in place. And so I first thought we had this sort of balance where we had like a range that we were bouncing in, and we could have potentially broken out of that range and started our next move up. But when I saw that gap down this morning, I thought, what if this is just that level? What if after this huge day, somebody did something in the options market that caused the options market makers to start to hedge around this price level? The initial move of that hedging was lower, but now as we've crossed through it, they're going to pull it back down again. So yeah, I'm starting to think that that Trump candle high is a magnet, and that the further price moves away from it, the more likely it is to come back. But again, first let's fill the gap today. Then we can kind of have that conversation with more confidence, So we got a poor high and a poor low. Chop, chop, chop. This market will go. They're squeezing everyone. This is what I talk about with an artificial market. Coming up exactly to that A period high, which is exactly the opening price, and then reversing right at the moment that you take out these 383 stops. Who are those 383 stops? That's a computer. Some computer just got stopped out. And the games continue. Design Knob is saying now is the time to buy. You mean at the high of the day? Design Knob's like, this is where you should put your stop. Right here for your short. Just kidding. I love you. You know that. .365 says, what is the yellow line at 54.89? That's just, I drew that on the chart with my little drawing tool. And that's just a mental level for me. Like I said, if we're going to fill the gap, if we're going to get back up to 55.28, I want to see the market stay above 54.90. So that if we cross back through that, I know the market's heading for the lows, not the highs. Okay, so now we have repaired the poor high, and we have done what we call one time framing to the upside. So whenever the market breaks out of the initial balance, the range the market makes in the first hour, so in this case getting above the A period high, that means the momentum is now to the upside. Okay, the buyers have taken control of the market. We can also see that with the ticks now holding the zero line. So we were way oversold with the ticks. We got back to the zero line. We spent, 45 minutes or so chopping up and down through the zero line, and now we're turning it into support. So that is bullish to see. For the market to remain bullish and continue to the upside, it now has to continue to make higher lows each 30 minutes. So from this point on, I am bullish as long as we stay above 54.92. I know it's almost the same level as I had before, but if we were to, say, fill the gap, come back down, print the E period, then it would be staying above the D period low. And then if we printed the F, it would be staying above the E period low, and so on and so forth. So as long as we continue to make higher lows, we assume the price will continue to go higher in the next 30 minutes. That being said, vibe-wise, I do feel like the market is going to run out of steam once it fills the gap. So I think we get a little bit up into yesterday's range and then come back down through the open again. So I'm still looking for a gap fill. I'm not convinced we're going to go much beyond it. We'll have to wait and see if we get new buying when we get there. The market is one time framing. Act accordingly. Man, that sweep that they just did, where it went like, and it shot up super fast, was somebody with 1,200 contracts pushing the market sell button. That is fucking brutal. Look at how much slippage they got in a fraction of a second. They got 5 points of slippage in less than 1 second. How gnarly is that? Sucks to be you, bro. See, design knob, you don't got to feel so bad. At least you didn't get stopped out for 1,200 contracts. TNK says 250,000 of slippage. Yep, probably about that. River Rock says, I'm sure that was tasty. Jay says, or sorry, what was I looking at? I just saw something about Delta I wanted to respond to. There it is. Omar. Just an observation, but the delta on your price is showing a negative delta with the recent push up in the D period. Yes. So the very high and low will always have, the very high will always have negative delta, right? Because for the market to stop going up and turn around and come back down, there has to be more sellers. So yeah, that's definitely more sellers, but that doesn't mean that the market is going to reverse from here. Right? It just means at that moment when we popped up there for a fraction of a second, we ran out of sellers. They cleared the order book out, but we could still keep going to the upside. But yes, you are correct that there is a negative delta there. $365 says, what's next? As I've said, the gap fill. So the market getting to 55.28. I do not know what comes after that. I will have to wait and see. So once we get back up into yesterday's range, a lot of the people that have been going long this morning are going to take profits, right? So there's going to be, buyers who've been buying for a gap fill. This is where they start taking profits on their longs. Sellers that saw the gap down this morning but didn't want to chase price, the gap fill is where they're going to start putting their sell orders in, right? So anything can happen once we fill the gap. We may run into sellers and turn around and come right back down. We may not. We may run into sellers and then just go sideways. We may not run into sellers at all and keep, pushing up higher into yesterday's range. I just can't know that yet. Once we get there, then I start looking at all the things I look at. Tempo, volume, taper, ticks, on and on and on to try to figure out what's the next step for the market. So we will just have to wait and see. And to be quite honest with you, I won't care. Because I will have locked in my profits for the day and be ready to enjoy my afternoon. Pew, 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 pew. Bum, ba, da, ba, da, bum, 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 bum. There it is, ladies and gentlemen. The gap is filled. And so you say to yourself, how on earth could it have been predicted that the market was going to fill the gap? Well, the first thing that we paid attention to was the tempo and the volatility first thing in the morning. We created a weak high. So we started the day by creating a magnet at the high. But instead of coming back to repair it, what did the market do? It just continued to press lower and lower and lower and lower and lower, going straight down. Markets don't go straight down. So that was a sign that it could be getting itself overly short, right? Then we had a change in the market down here at the lows. We had the CPI news come out. The market shifted and reversed back up. It had no resistance at any of the potential resistance levels on the way up. That was a sign the momentum down was over. Then we played tug of war at the overnight low. During that tug of war, the ticks continued to show support and buying. At that point, we knew we had momentum from the ticks. We knew we had a weak reference that needed to be repaired and a gap that needed to be filled. That made the highest probability that the market was going to go up. At that moment, we had an opportunity to get long using 90 as a stop, targeting a move to fill the gap, which had a significantly larger potential reward than the risk that we were taking in. So at that point, we had probability of success in our favor, and we had a better reward than risk for the trade. Okay? This is how I trade. This is what I teach in the workshop. So if you are thinking, man, I wish I would have just made that 30-point move from the overnight low to the gap fill, why on earth wasn't I in that trade? You might consider taking the workshop so that you can understand how I approach things. It is not that I knew for sure the market was going to fill the gap. Okay? That had nothing to do with it. It was that the probabilities favored it and the opportunity in terms of risk reward was there. It was a good trade. Now, if the gap had been right here, that wouldn't have been a good entry because the reward would have been about the same as the risk. And so it wouldn't have been a good trade. But because the reward was greater, it was worth taking the trade. This is what we call thinking in probabilities. Okay? Knowing you don't know what the market is going to do, but knowing you do for this second, in this moment, have a probability in your favor, that's when you start looking to execute. So if you are thinking about joining the workshop, I highly recommend it. It's $400, and I know that that's a lot of money for some people, but I promise you, you can make back $400 in a day of profitable trading. And you will have many, 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 many days of profitable trading if you can learn to do it right. If you can learn how to read the market, how to find trading setups, and how to adjust as the market conditions change. Because mark my words, the only thing I can tell you is that old saying, there's nothing certain but death and taxes. There is nothing certain in markets other than the fact that they are constantly changing and that the behaviors are constantly changing. And so learning to adapt to those changes in real time, that is your edge for the next 20 years, right? That is not your edge for today. In this moment is your edge for the rest of your career. That's what I teach in the workshop, is how to change with the market, how to keep up with what's going on so that you can stay on the edge the whole time. Thank you so much for joining me today. I hope you enjoyed it. Only 50 of you have pushed the like button, even though there's 101 of you here. So I'm a little disappointed in your like performance here, but I appreciate you all coming nonetheless. I love you all, and I look forward to seeing the members of the brigade in the private stream tomorrow morning. Once again, if you are thinking about taking the workshop, it is 2 weeks long. It is 4-hour sessions, 3 to 4 hours, depending on what's happening with the market. The first half of the session is, traditional lecture style with a PowerPoint. And then the second part of the presentation is live markets, pointing things out. I will teach you how to read the auction. What I've done this morning in front of you is reading the auction. I'll teach you how to do that for yourself. But more importantly, I will teach you how to hone your intuition, think in probabilities, manage risk, and learn to differentiate where your problems are. Are they with your market understanding or with your psychology? This is the stuff that is a game changer, and very few people will teach all of this in one course. None of them. Nowhere will you find all of this in one course for this price. This is the deal of a lifetime, and I do it for you guys. It's on purpose that I keep it so cheap and accessible, because I just want to give back to the community for all the trading is given to me. I want to give back and support other traders. Most people will fail at trading inherently. Most of the people that fail in trading will fail because they never had a chance at success, because they were chasing quick money, easy wins, and they weren't building a disciplined practice of skill development over time. That is what I teach. And that is what you need if you want to take yourself from treading water to consistently making profits. Thank you all so much for joining me. I hope to see you in the workshop on May 12th. Have a great day, everyone. As far as what to carry forward, as I said, the momentum to the upside does not have to keep going anymore. We got back to yesterday's range. This would be a great place for the momentum to flip and reverse and the market to head back down. The way you will monitor the momentum for the rest of the day today is what we call one-time framing. So if the E period prints in about 15 minutes and they keep the E above the D low, assume the E period can make a new high. Okay? If the F prints and they keep the F above the E low, then assume that they can keep it going. Each 30 minutes, as long as they keep making higher lows. The next major resistance to me is this area right here around 55.50. So if we can stay inside yesterday's range, continue to spend time, continue to bring in volume, continue to one time frame, the next major move to the upside would be 55.50. Thank you guys very much, and we'll see you next time.